Right, thanks everybody. Thanks for coming in today. It's the LCG's weekend webinar with myself, Jasper Lawler, Senior Market Analyst here at LCG. Obviously an interesting week. We're digesting still the shock of the UK election, but we're moving on. And there's a lot of central bank meetings this week, so we're going to discuss those. You know, just a quick roundup of what's going on, because obviously we did cover a lot of things in the week ahead video. If you haven't watched that, I suggest check it out. Then we'll dig into the charts. And obviously any questions, as per normal, just let me know. And I'll do my best to answer them. So we're on the week beginning June 12th. Big themes still very much intact. UK general election in the rear view mirror now. So to some extent so are the French elections, because we had a first round result from the French elections over the weekend, and they showed a pretty sweeping majority for Emmanuel Macron, who obviously won, his party rather, and of course he won the presidential election. So second round of the French parliamentary elections, first round was obviously completely eclipsed by the UK election. Second round looks like it's a done deal at this point. So, you know, I think on the margins, just helping support for the euro, obviously we'll look at the chart for the euro dollar in a second, but the question here is, can we kind of breach that 113 mark, which is acting as a bit of a barrier at the moment. Doesn't to me look like a double top pattern, but it's got the two peak characteristic. Well, again, we'll have a look at it in a second. One thing to note is, I don't know if you look at COT data, the Commitment of Traders report put out by the CFTC, but that showed the first bullish shift in the US dollar last week through Tuesday it actually is, in 6 weeks. So people getting a little bullish on the dollar into the Fed meeting. Kind of makes sense, right? Because they are set to raise rates. So the dollar had been tumbling into a meeting in which it's almost unanimously agreed they're going to hike rates. So that doesn't entirely make sense, only in the context of, you know, the UK and Europe recovering after the kind of political upsets, potential for political upsets in the UK. It's going to happen. So, you know, that's why the pound's sort of underperforming a bit. Euro's still doing all right, still getting that political benefit. But as I said, the US dollar may be turning a corner here. We've got a look at UK economic data. So the first sort of minor data we had, which is normally not too much paid attention to, but it did show Visa said that consumer spending on their credit cards obviously dropped year over year for the first time since 2013. So first time in 4 years that we've not spent more year over year in the month on our credit cards. So yeah, that's not a great sign for a very much a consumption-led UK economy. So that could start weighing on the pound if we see that manifest itself, particularly in the retail sales data this week. But obviously we've got the inflation data as well, so we're going to be pairing those two off. How is inflation comparing to, and then we've also got the unemployment and the wage data. How does the inflation compare to wages? And the general expectation is there's going to be a bigger squeeze on the cost of living, hence we're getting the Visa data, hence we're probably going to see some soft retail sales data. Although to be fair, they did bounce back in April, so the question is, does that continue through May? Visa data would suggest no, so that's perhaps a reason to suggest that we test the lows in sterling. And we are at lows of the day. We'll have a look at that in more detail. The other thing is that there was a big sell-off in all the tech stocks on Friday, and that's kind of partly why the European market is down at the moment. I mentioned, I think it was even in last week's webinar, that, or maybe it was a week ahead video, but basically there's been quite a high concentration of bets in US stocks into those core technology companies, Apple, Facebook, you know the names, Netflix, etc., the FANG stocks. And so they all rolled over pretty big on Friday. We're coming into the end of the quarter. So this could be some portfolio repositioning starting a little bit early before the end of the month of June, because these tech stocks have been on such a run. And the risk is they've really been the only ones doing well. When they stop doing well, the whole market could stop doing well. So that's a risk that we face. Worth noting that Mizuno downgraded Apple, put them from buy to neutral, and so Apple shares are supposed to open down 2% today. All right, let's switch gears to the platform. Of course, I'm going to put it white. So usual format, go through the FX, go through the indices, go through the commodities. Any questions on anything extra, let me know a bit before the end of the webinar and try and cover them at the end. So yeah, here's the situation I was talking about with 113, and what's to me not really a double top, but obviously we kind of are faltering heading into the 113 level. We've not actually probed it yet, but obviously you know, this is not great evidence of a new, this is not a strong conviction break to new highs here. We touched the new highs only just and rolled over. We're holding above the 111.50 mark at the moment. That's the kind of round number that's supporting us. So a drop through there I think would be quite material. So if we drop through 111.50, that to me is probably signaling a drop down to 110. You know, maybe that doesn't even come from the European side, though it can, because obviously with the ECB meeting last week, they are very unhawkish, and we've had comments today from Benoit Cour, who's an ECB member, saying that it's too early to talk about tapering. So these kind of, some of these bets on the political unwind, that's the political risk unwind trade is still there in the euro, but the bets on tapering are kind of coming out the market a little bit. I'm still confident. Well, I say confident. I still generally think that the ECB is going to have to signal tapering soon because inflation's on the rise. But they're being very slow about it, and I think some people are losing a bit of faith, and that's why I think the euro could potentially roll over here, even though we've not had the confirmation yet of a top in the market. We're still uptrending, so just keep that in mind. We're uptrending, but there's some fundamental and potentially political here, technical reasons with around this 113 level to suggest that maybe we're stalling out a bit in the euro. Well, I'm going to jump over to sterling now. Another question: can sterling jump down to the 1.1s? I mean, that's well outside of most people's bets. Certainly, there were calls for parity after Brexit. They quickly got wound in, and I would say this result, if anything, has made people a bit more negative on sterling. But I would say the general consensus was negativity on sterling anyway, so I don't think that this election's necessarily changed it. I think people got too negative and got caught offside when the UK economy fared okay and the sterling bounced. But obviously part of the bounce, obviously this whole move up there, you know, we talked about in the election special webinar last week, you know, that's kind of getting unwound at the moment. The election effect is basically being unwound, but that only starts around 125. That doesn't take us to 1.1. I'm not that negative on the UK economy. You know, I don't necessarily support, but I laugh and sort of almost think it's the way to go. Like Tim Martin from Wetherspoon's just saying, you know, that's it. Just let's just hit the World Trade Organization trade terms, and we'll work out the rest with Europe later if they're interested. You know, I think so. And even if not that I'm advocating that, but even if we did that, I don't think sterling justifies being at parity or 1.1. You know, I think the UK economy is an open, fair, good trading economy, and we do fine either way. Obviously, we want the best result. That's probably going to have good. Best result would be good trading terms with Europe, but I think we'd be okay anyway. I don't fundamentally see why we'd have to drop that much. It would have to come from the dollar side, and it doesn't look like the US is really firing on all cylinders either. So in terms of the technical setup at the moment, by the way, I put out I've done a snapshot video, first one in a while. That should be out on YouTube quite shortly. So that explains why I've got these, where's my mouse? I've got these yellow circles here, just saying this was instances of the past where we had kind of like snap reactions and the market kind of came back, leaving us with like long tails, very much akin to this kind of reaction here where we snap down and finish well off the lows. You know, I drew this line in previously. It's not a rocket science line. It's basically kind of the bottom of this sideways range that we've been in. We're coming off there. We tried to bounce this morning, talk of a sort of softer Brexit, etc. And now we're rolling over, and it's looking at the moment like maybe we're going to come down, test these lows, test 126 perhaps. So this is basically not far off a head and shoulders pattern, and we've broken a fairly obvious neckline. It's just that the break was not that confidently done. We finished below the neckline, but we did finish the day higher as well, and quite well off the lows. So you want to kind of see it, generally you want to see a confident break with a close down at the lows to feel like there's real conviction in the break, but here there isn't. But maybe that just provided the opportunity for a better entrance on the short side. We are below the moving averages on the daily chart. We're in part of a kind of wider weekly range thereabouts. We've come off a big round number, the 130 level. So there's a lot, and obviously a big bearish engulfing candle last week. See it better here. So a lot to support lower prices from here. So I think, to me, a test of 126 seems entirely feasible, and maybe a move down to 124 even. One thing that I've removed from my charts, but obviously when you come back to the area again, worth kind of chucking back on, is just this little trend line through here. You know, we did the break to the top side, hit 130, rolling over. Perhaps we come down here, and that would be right in around the 125 mark. So keep that in mind as well. Yeah, all the YouTube videos are listed under market analysis under LCG. Just for a question, Mike. So moving swiftly on to dollar yen. So yeah, this one has been kind of frustrating for me because it was well on it with the big bearish engulfing candle off the confluence of moving averages here. This was a big strong bearish move, but we had one leg down, and then we kind of caught around this gap, the sort of the 109.50 kind of handle, and 109 I think we got down to as well, and we bounced up a lot, but now this line is playing in again. So it's just one of those examples where, you know, sometimes you've got to be prepared for a bigger bounce within the downtrend. It seems like we're still heading lower, but there's not a really clear trend taking place at the moment. To me, it seems like probably odds on we're going to come down and challenge 108.50, as in we're in a steady downtrend down here to the lows. And I suspect we take out the lows, but it's not the most clear-cut trend, I have to say, in dollar yen at the moment. We're below the 200-day moving average, below the 20 to 50. You know, so we had a nice 3-day bounce, which, with the benefit of hindsight, provided a nice opportunity to get in and around. You know, it went through this support turned resistance here, but you can see it's kind of holding in the end. And you could maybe say that this area, sometimes the spikes are misleading, and actually more it's like these closes up here is proving to be the resistance once and resistance twice again. So to me it seems reasonable that we come down to check test the 108.50s is the round number, and then potentially the lows. Looks like odds on at the moment. Again, we've got the Bank of Japan later this week. You know, I think there's going to be a whole lot of nothing from the Bank of Japan, although economic data from Japan has been improving a lot. So obviously that would be I got a gigantic collapse in dollar yen if suddenly the BOJ were to announce that they're moderating their QE program. They do like surprises, so keep that in mind with the Bank of Japan. They can just suddenly announce stuff when it's not really planned. You know, they've got a really bloated balance sheet. They could do with announcing tapering. But that would be really interesting if the Bank of Japan did that, and I think stock markets as well. Even if you're just an indices trader, they'd be affected by the Bank of Japan announcing tapering, because it looks like the ECB don't really want to touch it, but Japan's doing a lot better economically, and their policy has been actually more extreme, buying stock ETFs and things like that. Some of it was just, there's 3 out this morning about how the big Japanese tech companies have been doing well, Sony, Nintendo, etc. So, you know, confidence is up in Japan, so maybe they could do something. If they did, if they announced that they were adjusting their yield target, or getting rid of the yield target, or reducing the amount of QE per month, or their total planned purchases for the year, that would be big. So that would be a yen going up, dollar yen going down scenario. So look out for that. That would be a big reason for us to take out these lows down here and really get the downtrend into motion. And the BOJ meeting is on Friday, by the way. Okay, moving on to FTSE 100. Kind of went on about this ad nauseum in the week ahead video. Again, that's on YouTube too. Yeah, it ended up pretty nice. We had the 7,450 as the first layer of support, first round number support from this peak, and then we had the 2 peaks here and the low here, and we just kind of clipped those, hit the 50-day moving average and bounced up. So anyone with a buy order in the vicinity of those previous peaks and the 50-day SMA, love and life at the moment. That was the perfect dip buying opportunity. It was limited, and it was one of those instances where you wanted to be trading the CFD or the spread bet, because by the time the FTSE opened on Friday morning, it was higher after having been lower by whatever that was, 1% or so. So at the moment, the market looks all right. That's kind of nice bullish engulfing with a long wick. No particular reason to think that can't continue. It was a bit of a more questionable weekly candle, but we still held above the 7,500 level, which I thought was quite significant. So, we're still right in the midst of that record high territory. The market still looks well underpinned to me. Maybe chance of a kind of range to kind of stabilize a bit after that down finish. We did have that big push high to the new highs, the dip, the correction. Maybe we range a bit before we can eventually move to higher territory. Obviously, it could become a more protracted trading range should the pound burst right back into life. That strong pound, weak FTSE relationship. Germany 30 has been in this kind of tight trading range. We've been waiting for these peaks to break. Hasn't quite happened yet. We've got the higher close on Friday with markets reacting generally unbothered by the UK election result, but that tech sell-off on Friday. Germany, the one thing to note about the Germany 30 is that it doesn't have many tech stocks in there, so theoretically it shouldn't be as long-term bothered. Sorry, just that line there, being a bit ADD. So might be one to watch if tech becomes a problem. You'd want to look to indices that have less tech. UK 100 as well doesn't have too much tech. Obviously since we sold off ARM Holdings. So maybe look for the bottom of the range if this sell-off continues, maybe some outperformance from the DAX. But again, in all these indices, this is an uptrend, guys. There's no evidence yet of a break to the downside. What would be? Well, 12,500 has been support twice, been resistance once. It's a round number. It's also about the 50-day moving average. We've had some false breaks of the 50-day moving average. It's more likely to be a buying opportunity there. But if we see a substantial move below it, then look for bounces and possibly a deeper sell-off. Pull out a bit in the Wall Street chart. So we're still looking fine on Wall Street. Again, the Dow has less tech stocks than the Nasdaq. That's why it's been underperforming for most of this year. The Nasdaq's been doing very well. So S&P 500 has tech stocks, but it's diluted because it's 500 companies. Dow has very few, if any, none really. Like Apple, obviously. So could be, if the stock market bull continues, but tech less so, then actually the Dow can start to outperform the other indices. And as I said, we're still in uptrend territory. We've only just about broken out of this kind of, if you classify the trading range as basically being, can't see my cursor for some reason. Yeah, basically classify this as the trading range. We're obviously only just popped out of it as of Friday, and now we're kind of rolling back a little bit, but still otherwise looking good. I think if we just take out these cluster of lows, that's enough to kind of lose confidence in the breakout, and potentially we trade right back into the range again. But obviously look for another test of this broken trend line, maybe down here, then we're off again. Yeah, great question, Tony. In my mind, the Dow is most definitely overvalued. You look at the kind of traditional valuation models, and most of these US indices are really loftily priced. And so if you're looking for a bearish case on indices, you can always turn to valuation. But the thing is, they can stay overvalued for a prolonged period of time. So I think it's something to be aware of, and you know that these indices are overpriced, and when there is evidence of a sell-off occurring, you can have more conviction that it's going to continue. But again, just bear in mind that it's been overvalued for quite a while now, and it hasn't stopped the market moving higher. But other thing to say relative to that, and it's been one of the reasons why people have been switching to Europe a little bit. Inflows into European mutual funds and things have been on the rise because European markets are less overvalued than the US. So maybe that's one way to look at it, is relative valuations. Obviously, there's a massive bull market in stocks going on at the moment. They're all overvalued, but which ones are less overvalued? European stocks are less overvalued than the US. The US is pretty much the most overvalued out there. Switching gears to crude oil. So potentially a little opportunity in here, I mentioned this in the week ahead video again, is that we're in a kind of a potentially pivotal point in crude where we've taken out this original trend line. We've held above the alternative trend line going through here. So is that us just holding this trend line? Or are we in the midst of just testing the underside of the trend line before we roll over again? So we're right in that kind of 49 handle. Maybe we get another bounce to 50 because that was this low here. But somewhere in this vicinity, there's potential for the market just to roll over again. But keep in mind, it's been very rangy. We've had a sharp number of down days, and then almost as soon as we get the first signs of an up day, the whole thing just happens to the upside and then downside, upside. So keep in mind, this is a potential opportunity here for the sell-off to really accelerate. But equally, we could just continue the same thing up here, up to maybe 54 or so. So where we close today, I think will be quite telling. Bottom half of the range, maybe we get a continuation of this downtrend, an acceleration down to the 40 mark. If we close today above this rising trend line, above 49, then probably we can just expect a nice little run up to 54 again. So potential opportunities either way. You don't have to really take a view. It's just that we're at quite a big level. So either it holds or it doesn't. Weekend videos, so what I'd always suggest is subscribe on YouTube, then you can get the email updates on your private email for when new videos come about when you subscribe to us. So that's an easy one, independent of our own emails, but we should be sending emails out to most clients about this the week ahead. Those who accept marketing preferences should get the week ahead video. So if you don't, contact customer support at LCG, and we'll get you on that list. So gold, interesting at the moment. We've basically run into the 12.95 and rolled over, but we're coming down into this little cluster of moving averages. So theoretically, this little uptrend here is still intact. but it's just clearly lost a bit of momentum here, and it's a bit like oil. We've had just big surges up, big surges down, big surges up and down. So once you see a bit of a turn like this, my suspicion is that we get a further drop down, perhaps to retest this trend line again, which would take us to about 12.28. But I would want to see us get below these moving averages first. Again, we've got a broken trend line to reconsider. If we do get a bounce from these moving averages, that would be the line that we have to cross, to me, to continue to the top side. If we get a little bounce from moving averages, hit the broken trend line, maybe I can scroll out to show that a bit better. You know, depends where you want to draw it exactly, but if we get a bounce from here, touch those and then roll over that, to me, you know, even if you put your stops above the highs around 1300, still quite decent downside down to that 1230, 1228 mark. You know, overall, the political uncertainty putting a bit of a floor under gold. It's been doing well, but it's been a bit of a slow grind higher. So clearly people aren't completely convinced by the gold bull case, right? The extent, obviously, down moves are always more vicious than up moves, but you do get, you know, nice sharp uptrends occasionally. That's not, we got it at the start of the year, but it's been pretty wavery since. So certainly potential that we just take out the trend line and come down and test something like 61.8% of this move to really test the bull's metal. So watch out for this. You know, basically it's a big round number, 1300, right? So big long-term investors coming in, selling ahead of 1300, which was the previous peak before. In and around the trend line, you know, maybe a few people buying on this break. So people buying this break, offering orders for big sellers to come into. You know, probably what determines how gold performs will be the Fed this week. Fed meant to lift rates, so no surprise that gold is dropping because the US dollar is going up ahead of the rate hike. But what do the Fed signal after that? That's a bit less certain. So that will be, you know, probably the key for gold. So I think we'll wrap things up there. Going to call it a day at that point. Don't want to drag on for too long. I hope that was useful. Yeah, I think nothing other to say than, well, obviously we've got the, as I said in the wound up here, central banks, UK data, all the goings on around the UK election, the sell-off in tech. They're the big things to be watching for, and some of these chart patterns that we mentioned here. So I hope that was useful. Good luck with trading this week, guys, and please, yeah, follow myself on Twitter and the LCG trading platform on the other social media channels. Cheers, guys. And I've stopped recording there, guys, but for those of you left here, I just had a question: how likely is the rate hike? Now, I would say this week the rate hike's almost guaranteed. It would be a big shocker to the market if we didn't get this rate hike this week. So it's not even about this rate hike; it's more, do we get one in September? And so what you want to hear is language from the Fed that's quite dismissive of some of the soft data that we've had recently, and we want to hear just, yes, the US economy is on track, price inflation is on the right track for another rate hike in September. And obviously they'll be talking perhaps maybe in a bit more detail about the balance sheet as well. So it could actually be what they say, what they don't say about the balance sheet that determines whether we end up higher or lower on the dollar on Wednesday. Rather than this particular rate hike, which is pretty much priced in at this point, or it's expected at least. All right, thanks again, guys. Good luck trading this week. Jasper signing out. See you later.